my true pleasure to welcome you and your partners this morning to mark the start of your ETF journey. We're grateful for the opportunity to be a part of this new venture as you provide choice for clients looking to own your strategies.
Ninepoint is, as the leader in alternative asset management in Canada, has grown to over $7 billion in assets, but our focus has really always remained on the same three goals. First, to innovate new and value-added alternative asset strategies for our clients. Second, to work with those clients to help them integrate those strategies so they can realize the benefits of better diversification. And third, but not least, find new and innovative ways for our clients to access those strategies. And that's certainly a big reason why we're here today. We've worked with NEO in the past. It's an important partner for us. And we chose NEO really for a couple of reasons. One, because we trust you guys to get it done properly. But obviously the technology was an important part of it as well in terms of understanding how these types of ETF classes that need to be worked on our end and our back office. And as well, just the whole marketing angle. So it's been a great partnership for us and we look forward to continuing it going forward. These are 4 funds that we're offering ETF classes for, but our expectation is that we'll continue to do this in the future as our clients increasingly look for this type of way to access our products.
10, 9, 8, 7, 6, 5, 4, 3, 2, 1. And the market's open and lots of fun moving around already this morning. On behalf of the team, we'd like to present you with a unique, one-of-a-kind piece of art, which we commissioned through our partnership with the Ontario College of Art and Design University.
My name is Elise Conlin, and I created this piece for you guys. I wanted to create something really inspiring and representative of Ninepoint's brand values. So I wanted to create something that was reminiscent of like a creative morning, starting your day quietly at home.
That is great.
Very nice.
Thank you so much, you guys. We will find a prominent place to display this gift. So thank you very, very much, NEO and Elise, for your thoughtful artwork.
Over to a bit of a presentation.
This really is about us providing more choice to our advisors, making it easy to deal with us, making it easy to allocate to our mandates. So it's a very exciting day that, for advisors that have built their practices almost entirely around ETFs. This allows us to be part of their business in a bigger way, or perhaps even for the first time. So it's really about broadening our distribution offerings and about giving advisors the choice that they want. These 4 mandates are what I would describe as portfolio building block type investments. They are particularly of interest to discretionary advisors, but they are also very useful to various kinds of non-discretionary practices as well. And I just want to take a few moments to talk about each of the mandates a little bit to let everyone know the great opportunities that they represent. The first one is Ninepoint Diversified Bond, N-Bond, and BND, so I think that'll be pretty easy to remember. And that fund has a very wide focus, or very wide set of assets it can hold. Diversified Bond invests in both domestic and global corporate credit. It can also hold government bonds, developed market sovereign debt, and even some equity exposures from time to time. DIB Bond Fund is managed by the lead manager, Mark Wisniewski. Mark has an incredible pedigree. He's been with us for a number of years, but his extensive career to date has included stops at Goldman Sachs, Gluskin Sheff, TD, BMO. He is very ably supported by Etienne Bordelot, who plays a major role in the option strategies. And these strategies are part of what has made this fund such a success for investors. The mandate has been extremely good at producing not simply attractive returns, but also excellent risk-adjusted returns. Everything in the fund is done in the context of how much risk we're taking. And what we've seen in the performance of bond funds in the last few years in particular, and you only have to look to March, Our funds are, this fund is structured in a way, and the portfolio is built in a way that it really gives you that downside protection during those scary times. And that's why so many folks have been allocating to it. And now we can offer it as an ETF. So it's really exciting. It's a very actively managed portfolio. We're always excited to show people how much it changes in the run of a year. We have the ability to alter currency exposure, duration, security mix, credit rating. The target is that we're looking to, acquire positions that can make 4 to 6%. That is the goal, going into every position in the portfolio. And I guess one other thing I would say about it is, while not a tiny fund, Ninepoint Diversified Bond lives in a world of giants. So it's actually a nimble fund for its space, with well under $1 billion in it. And some of our competitors have, many multiples of that in AUM. And Mark and Etienne would both say that it allows the fund to get in and out of positions and be more nimble, and does enhance returns. Obviously, the fund is growing because it's done well, but it's growing in a manageable pace. I want to talk a little bit about the two precious metals funds, GLDE and GLDE.U, SLVE and SLVE.U. Also, mutual funds at our firm also have a successful history and track record. This is an area that has really been out of fashion for a bit, precious metals, both gold and silver equities. We've, basically, there has been a renewed interest in both funds and in both sectors this year. Both the gold and precious minerals fund and the silver equities, which are of course the funds, they have attracted assets this year, which is great. A lot of our folks like to kind of trade them at the margins, take overweights, underweights from time to time during the year. And this will allow that to be in a structure that suits that a little bit more. The other interesting thing is, I think I said at the top, but maybe I didn't, is that with the degree of monetary stimulus that's been going on with central banks, we're clearly in an environment that should be very friendly and positive for precious metals. And it's an area that, does not feel in any regard late. It feels like early days, as the generalists have not really piled in a big way into precious metals equities. The fund is very well advised and managed by our partners at Sprott. Maria Smirnova and Shri Katkudkar have done a great job with the fund. And it's with the recent pullback, it creates a very interesting entry point. And then finally, I want to talk about NSAV, NSAV, which is our high interest savings fund. I'll keep my remarks short. It's a cash vehicle, but it's the strengths of this ETF and of the fund version of it is that it invests in high interest savings account entirely at Schedule I banks. So you want your savings account or your cash to be safe, safe, safe. And that's what it is. We don't have anything exotic in there. You can count on it to be super high quality and never be anything complicated in your life. This is for your cash positions or while you're waiting for some other trade to develop. And the ETF gives you another way to buy it. The current gross interest rate is 75 beeps before fees. And if you cap it, if you compare it to some of the other things out there, if you look at the a 1 year treasury bill would be maybe 20 beeps, something like that. If you look at 3-month treasury bills, basically nothing. This is a way to squeak out a little bit more than you're getting with other sources, and it's safe, safe, safe. So I just would say in closing that we're very excited to be partnered with NEO, and there's been a strong interest in the 4 new four mandates coming onto the ETF world, and it's a very exciting day for our firm.
Congratulations and thank you again.